Welcome to the Korea Research channel. Before we jump into today's deep dive, please make sure to like this video and subscribe to the channel so you never miss out on our future discussions. Okay, so I want to start by asking you to think about the engine driving the global AI boom. You know the companies designing the massive processors, the hyperscale data centers being built, and you obviously know the software.
Right, the stuff that makes all the front page headlines.
Exactly.
Yeah.
But what if you were completely missing the fuel line? I mean, large AI models are creating an absolute catastrophic bottleneck for high-performance memory. And the keys to unlocking that bottleneck are securely locked up in South Korea.
Yeah, to really grasp the physical reality of artificial intelligence, you can think about those GPUs everyone is so obsessed with. You can have all the processing power imaginable. But if you cannot feed data into those processors fast enough, well, the entire system just chokes.
It just sits there.
Literally starving for information, yeah. And South Korea essentially holds the valve to that exact fuel line.
All right, let's unpack this. Today, we are looking at how 2026 is becoming a historical turning point for the KOSPI. That's Korea's stock market, for those who might not know.
Right.
And we are exploring how brand new financial plumbing is finally letting everyday global investors like you buy directly into the Korean AI memory duopoly. But before we get into the mechanics of, buying foreign stocks on your phone, we need to understand the physical technology driving this massive shift.
Yeah, you have to understand the hardware first.
Right. So why memory and why specifically Korea?
Well, the global AI investment cycle is really maturing right now. For the last couple of years, the market obsession was almost exclusively about the processors themselves and just the broad data center infrastructure.
Just getting the buildings up and running.
Exactly. But now the realization is finally set in that traditional memory chips just cannot handle the workload of modern AI. I mean, we are moving away from standard DRAM and NAND into a technology called HBM, which stands for high bandwidth memory.
I always hear that acronym thrown around, but what makes HBM fundamentally different from the memory sitting inside my laptop right now?
It really comes down to architecture. Normally, memory chips are laid out flat on a motherboard, right? And they communicate with the processor over a physical distance.
Okay.
Think of it like a single-lane road connecting a factory to a warehouse. HBM takes those memory chips, stacks them vertically like a skyscraper, and places them incredibly close to the GPU, and then it connects them with thousands of microscopic wires. So it essentially turns that single-lane road into a 1,024-lane superhighway.
Wow. And building microscopic skyscrapers in memory sounds, frankly, incredibly difficult.
Oh, it is a nightmare to manufacture. The yield rates, which is the percentage of chips that actually work without defects, are notoriously challenging. And South Korea isn't just participating in this specific market. They are the undeniable global production hub, and they're anchored by two massive companies, Samsung Electronics and SK Hynix.
Which brings us to some really mind-blowing data from May of 2026. We saw details showing how major global technology firms were approaching SK Hynix with just unusually aggressive offers.
Yeah, desperation, really.
Seriously, tech giants were offering to literally fund the expensive manufacturing equipment for SK Hynix, or even invest directly in their production lines just to guarantee they get the chips they need.
And, one detail from that time stated that available capacity for these high-bandwidth memory chips was essentially zero.
Wait, zero?
Basically zero. That really underscores the severity of the bottleneck. Global tech companies are absolutely terrified of running out of HBM.
So investors looking at this are not just buying Korea as a country. They are looking at this massive AI highway, seeing a massive traffic jam at the memory bottleneck, and they're essentially trying to buy the toll booth.
What's fascinating here is how specific and targeted this thematic play really is. Korean companies own the single most critical choke point in the global AI infrastructure build-out. But historically, executing on that narrative has been painfully difficult for an individual investor sitting in, say, New York, London, or Sydney.
Right, let's talk about that friction, because if the demand is so high and the bottleneck is just so obvious, why haven't retail investors just dumped their portfolios into these stocks already?
Well, for decades, foreign investors had to navigate something called the Foreign Investor Registration System. The Financial Services Commission, the FSC, noted this system had been in place since 1992.
Okay, so a very old system.
Very old. And under those rules, if you were a foreign individual wanting to buy a Korean stock, you had to formally register with the Financial Supervisory Service. You had to submit paperwork, undergo background check of sorts, and wait to receive a physical foreign investor ID card before you can even open a brokerage account.
Wait, you needed a government-issued passport, basically, just to buy a single share of stock?
Basically, yes.
I can see why the average retail trader would take one look at that process and just walk away entirely.
Oh, for sure. The friction was intentional back then to control capital flight. But in a modern, hyper-globalized economy, it was just a massive barrier. So Korea finally abolished that archaic registration system on December 14, 2023.
But simply tearing down the old system didn't automatically build a new functioning pipeline, right?
No, not at all. That required detailed regulatory frameworks, which the FSC finally issued in November 2025. And those guidelines laid the groundwork for what we call a foreign omnibus account.
Let's break down that plumbing for a second. A foreign omnibus account sounds highly technical, but it's essentially like a giant wholesale club, right? It allows a foreign brokerage, let's say an app you already use in the US, to hold and settle Korean securities for thousands of retail investors through one massive consolidated account.
That wholesale club analogy works perfectly, actually. Instead of every individual shopper needing to undergo a background check and get an ID card at the door, the foreign brokerage holds the master membership. They deal with all the complex border logistics and the clearinghouses. The end investor just opens their usual trading app, searches for the Korean stock, and just taps buy.
And the massive catalyst in 2026 is Samsung Securities officially partnering with Interactive Brokers, or IBKR, to turn this omnibus concept into an actual reality. But I have to ask, did Korea just strip away all their regulations overnight? Because turning the KOSPI into the Wild West for global retail money seems like a recipe for disaster.
Oh no, the oversight remains incredibly strict, which is a very crucial distinction here. Under the new 2025 FSC guidelines, this is absolutely not a free-for-all.
Okay, that makes sense.
Yeah. Foreign financial investment businesses operating these omnibus accounts are required to maintain detailed transaction records for every single end investor. And they have to submit those records to the relevant Korean securities firm every single month.
Wow, every month.
Every month. Strict customer due diligence, KYC rules, and internal controls to prevent unfair trading and money laundering are completely mandatory.
So behind the scenes, the compliance teams are working just as hard. The innovation is simply hiding all that paperwork from the retail user interface.
Exactly. It is a modernization of the plumbing, not a deregulation of the market itself.
And that brings us to how this structural reform actually impacts the Korean market. Because anyone tracking Asian equities has definitely heard of the Korea discount.
Let's translate that for the listener, just in case. The Korea discount is this long-standing frustration where Korean stocks trade at significantly lower valuations compared to similar global companies, even when the Korean companies are incredibly profitable, right?
Right. And the discount stems from a few core issues. You have geopolitical risks, obviously, but more importantly, you have corporate governance concerns tied to the unique structure of Korean family-controlled conglomerates, which are known as chaebols.
Right, the cables.
Yeah, historically, many of these cables hoarded massive amounts of cash, prioritized the interests of the founding families, and offered very weak returns or dividends to minority shareholders. So they were viewed as cheap, but sort of toxic to hold if you weren't part of the inner circle. And because the market was so full of friction and hard to access, global investors rarely bothered doing the deep research to pick individual stocks and fight for those shareholder rights. They just bought a broad country-level ETF and moved on.
And when global capital is restricted to broad ETFs, it severely limits the liquidity of individual stocks. It essentially stifles price discovery. You end up with massive Korean tech giants that are fundamentally underowned by international investors.
But here is where the IBKR and Samsung Securities partnership changes the math entirely. IBKR is a major NASDAQ-listed broker operating in over 170 overseas markets. This is not some small, localized trial run. It is a massive, high-pressure pipeline being connected directly to the Korean stock market.
It is. And we can expect three major impacts on the KOSPI from this specific pipeline. First, we will see highly diversified foreign participation. Historically, Korea relied heavily on sovereign wealth funds, pension funds, and massive institutional players who just move very slowly. Now, individual, agile overseas capital can flow in directly. And second, we will see significantly better liquidity for large-cap stocks.
And I want to focus on the third impact, the globalization of the market narrative. Because if a stock is easy to buy on your phone, it is suddenly easier to talk about on Reddit, on financial podcasts, and in Discord group chats.
Exactly.
Accessibility creates narrative. If you can't buy it easily, it's just an academic discussion. But if you can buy it, it becomes a viral investment story.
That's spot on. In modern financial markets, accessibility and narrative are deeply, deeply intertwined. And right now, the doors are swinging open and the crowd is rushing straight toward the memory duopoly, Samsung Electronics and SK Hynix.
Yeah, domestic Korean investors sometimes mash those names together into a nickname, Samjian. But for the global retail investor, these are just the powerhouses at the absolute heart of the AI supply chain. And the demand is not theoretical at all. Just look at the US-listed Round Hill Memory ETF. The ticker symbol is literally DRAM.
Oh, the data on that ETS is staggering.
It really is.
Yeah.
It launched on April 2, 2026. By May 1st, so less than a month later, that ETF hit $2.48 billion in assets, with $2.3 billion of that being pure inflows since the listing. And cumulative retail net buying surpassed $200 million in just 27 trading days. It is being called the hottest thematic ETF launch since the pandemic boom.
And it's important to note that Samsung Electronics and SK Hynix make up nearly half of that entire ETS portfolio. Global retail investors are aggressively searching for ways to express a bullish view on Korean memory.
But here's what I am struggling with, though. If I'm an investor and I can just open my phone right now and buy this massive DRAM ETF with incredible liquidity, why on earth do I care about this new omnibus plumbing? Why not just stick to the ETF and ignore the individual Korean stocks?
Because an ETF is a prepackaged basket, right? And retail investors increasingly want surgical precision.
What do you mean by that?
Well, what if you believe Samsung's legacy businesses in smartphones and consumer electronics are going to drag down their valuation, and you only want exposure to SK Hynix because they have the primary HBM contracts with NVIDIA? With an ETF, you are forced to buy both.
Ah, I see.
Yeah, direct ownership via the omnibus account gives you the ability to isolate your specific thesis. It also removes the management fees associated with ETFs and, critically, gives the investor direct voting rights.
That shifts our entire conversation from institutional flows to global retail flows. And we need to understand that retail money does not behave the way institutional money behaves.
Not at all. Institutions allocate based on dry, systematic metrics, MSCI index weightings, complex currency risk models, geopolitical exposure matrices, and strict portfolio rebalancing rules. They allocate based on spreadsheets. Retail investors allocate based on themes.
Right. Retail investors aren't looking at a geopolitical risk matrix. They're looking at the fact that NVIDIA needs HBM chips to make their GPUs work, and SK Hynix makes those chips. They follow narrative momentum.
And the consequence of that different entry point is really profound. The KOSPI is going to become significantly less domestically isolated. These massive Korean stocks are going to become highly sensitive to U.S. tech sentiment and English-language financial media.
So it's much more reactive.
Extremely reactive. If a major U.S. tech analyst talks about a memory bottleneck on a Tuesday, you might see a direct, rapid flow of retail capital into SK Hynix by Wednesday morning.
Because the rules of the game are fundamentally changing, the dashboard we use to monitor this market needs a major update. You can't just look at a headline saying, foreigners are buying and assume the whole KOSPI will rise. There are really 5 layers of data we need to be watching now to understand these new mechanics.
Exactly. The first layer is watching foreign net buying, but specifically concentrated in the semiconductor sector. That is where the omnibus channel impact will be visible first, rather than in broad index buying.
And layer 2 is watching the trading patterns of Samsung and SK Hynix themselves. Are they moving based on domestic Korean economic data, or are they starting to tightly mirror U.S. tech sentiment and NVIDIA's daily stock moves?
Right. Then layer 3 is using U.S. ETS flows, like that DRAM ETF, as a real-time demand signal for the broader memory theme. If the ETF sees massive outflows, that sentiment will likely bleed into the direct omnibus trading.
And layer 4 is the Korean won movement. Currency risk still matters immensely. I mean, if you buy a Korean stock and it goes up 10%, but the Korean won weakens 10% against the US dollar in that same time frame, your actual returns are basically zero when you convert the money back.
Exactly. The FX risk is real. And the fifth layer is tracking the expansion of the brokerage services themselves. Samsung Securities and IDKR are just the tip of the spear. Several other major Korean brokers are aggressively preparing their own omnibus services. We're talking about Yuanta, Meritz, Mirai Asset, Shinhan Investment, NH Investment Securities, and KB Securities.
It's basically an industry-wide arms race. They are all rushing to build these bridges because they see the fees they can collect from global retail money.
Oh, absolutely. And if more brokers join, the pipeline gets exponentially wider, and the market impact becomes much deeper than just one initial partnership.
Now, we've painted a very bullish, exciting picture of global money flowing into Korea to buy up memory chip makers. But let's put our analytical hats back on. What are the blind spots here? We need to clear up 4 key risks and misunderstandings about this new plumbing.
Yeah, we have to be grounded. The first major misunderstanding is the idea that omnibus accounts guarantee a KOSPI rally.
Right.
Easier access reduces friction and supports liquidity, but it does not change a company's balance sheet.
Hmm.
Stock prices are still dictated by fundamentals. Earnings, interest rates, valuations, and global macroeconomic conditions will always rule the market.
Misunderstanding number 2. The idea that all Korean stocks will benefit from this new money. The focus is going to be incredibly top-heavy, right? Global retail investors are going to target liquid, globally recognized names. So yes, Samsung and SK Hynix, but also internationally known companies like Hyundai Motor and LG Energy Solution. The smaller, purely domestic Korean stocks are likely going to be left completely behind in this initial wave because foreign retail investors simply don't know who they are.
That's very true. And the third misunderstanding is thinking that this system removes all friction. It just hides the hardest parts. Even with a seamless app interface, a retail investor in the US or Europe still has to deal with massive time zone differences for market hours, complex foreign tax treatments on dividends, and entirely different cultural norms around corporate disclosures and earnings calls.
And the fourth misunderstanding is the assumption that retail flows are always a stabilizing force. Retail money is momentum money. It can vastly increase liquidity on the way up, but it can also amplify a crash on the way down. If the global narrative around AI and memory chips suddenly weakens, or if a new technology replaces HBM entirely, retail capital can exit the KOSPI just as fast as it entered.
And that really raises the ultimate question for the Korean market. If the narrative fades and the momentum money threatens to leave, what keeps those investors holding the stock?
That's the million-dollar question.
It is. It comes back to the root cause of the Korea discount. Korean companies must actually deliver on transparency, corporate governance, and tangible shareholder returns. I mean, you can build the most efficient financial bridge in the world to bring investors in, but you have to give them a structural, fundamental reason to stay.
Zooming out, the overarching theme of this deep dive isn't just about interactive brokers or even the AI memory boom itself. It is about South Korea's systemic effort to make its capital markets actively participate in the global financial ecosystem. They are transitioning from a market that global investors respect from a distance to a market they fluidly trade. Korea is finally becoming, for lack of a better word, buyable.
Yeah, buyable is a great way to put it. And if we connect all of these threads, it leaves us with a truly fascinating clash of corporate cultures to watch out for over the next few years. Think about the historical structure of these Korean companies. The K-balls have been incredibly insulated. They are accustomed to answering primarily to their founding families, domestic regulators, and a very passive domestic shareholder base.
Now, inject a massive wave of vocal, aggressive, English-speaking retail investors directly into their shareholder registry. We're talking about investors who coordinate on forums, who demand share buybacks, who scrutinize every boardroom decision on podcasts, and who absolutely aren't afraid to publicly shame a company's management for hoarding cash.
The KOSPI has never faced that kind of hyper-vocal global shareholder pressure before. How will these traditional family-run conglomerates adapt the way they communicate and govern when thousands of foreign retail investors start demanding a seat at the table? It is a corporate culture clash just waiting to happen.
It's going to be wild to watch play out. We started by looking at the physical fuel line of the AI boom, and now you understand the financial plumbing being laid down to let you invest directly into it. Keep your eyes on the memory sector, the KOSPI's valuation, and those ETF flow signals as 2026 unfolds. This has been Korea Research. Please don't forget to like and subscribe, and thanks for taking this deep dive with us.